Ever wondered what's the secret to building wealth in the stock market? Undervalued stocks could be your answer. But what are these undervalued stocks, you ask? Are simply stocks of certain companies that are selling for less than their intrinsic or true value. Imagine finding a designer suit priced like a thrift store steal. The charm of investing in undervalued stocks is that it can offer significant returns. It's like purchasing a dollar for cents. And when the market finally acknowledges the real value of the stock, you have the opportunity to make a substantial profit. But of course, it's not as simple as it sounds. Identifying these hidden gems entails detailed analysis and a strong knowledge of market trends. If you're ready to uncover some potential diamonds in the rough, stick around. Before we dive into the stocks, you need to understand how to identify an undervalued gem. So let's get into the nitty-gritty of what makes a stock undervalued. First off, we have the price to earnings or PE ratio. This is a comparison of the company's current share price to its per share earnings. A lower PE ratio could indicate that the stock is undervalued, but it's not foolproof. It's always essential to compare the PE ratio with other companies in the same industry. Next up is the price to book or PB ratio. This compares a company's market value to its book value. A lower PB ratio could mean that the stock is undervalued. Another key metric is the dividend yield. A higher dividend yield could mean the stock is undervalued. But remember, not all companies pay dividends. Some may choose to reinvest their profits back into the business. So, don't disregard a stock just because it doesn't pay dividends. Lastly, never forget to look at the company's financials. Look for companies with strong balance sheets, consistent earnings, and positive cash flow. A company that's financially sound is more likely to weather economic downturns. And there you have it. These are some of the key criteria to help you identify undervalued stocks. Now that you have the tools, let's dive into our list of undervalued stocks. First on our list is Company X. With its strong financials and promising business model, it's surprising that this gem is still flying under the radar. Company X ticks all the boxes of our criteria for identifying undervalued stocks. It's trading at a discount to its intrinsic value, has a low PE ratio, and a high dividend yield. But that's not all. Company X is in a sector that's poised for growth. It has a robust roadmap for innovation, and its management team is known for their strategic acumen. They've demonstrated an ability to navigate market challenges while keeping their eyes firmly on their long-term goals. This makes Company X a solid investment for those willing to hold for the long term. Moreover, with its recent strategic acquisitions and partnerships, Company X is well positioned to expand its market share and boost its revenue. So, it's not just an undervalued stock, it's a potential growth stock as well. Company X is a potential gold mine waiting to be uncovered. Moving on to the second undervalued stock on our list, Company Y. Company Y is a hidden gem in the market, often overlooked by investors. But if we apply the criteria we discussed in Scene 2, we'll see that it's a diamond in the rough. Company Y's financial health is robust, with a strong balance sheet and a consistent revenue stream. It has a low price to earnings ratio, which suggests that its shares are currently selling for less than their intrinsic value. This low PE ratio is a clear indicator that Company Y is undervalued. Furthermore, Company Y is in an industry poised for growth. It's a leader in its sector, consistently outperforming its competitors. And here's the kicker. It's also investing heavily in innovation and research, which could potentially lead to groundbreaking products and services in the near future. Now let's talk about dividends. Company Y has a history of paying dividends consistently. This is a positive sign for investors as it shows that the company is profitable enough to return money to its shareholders. Lastly, it's worth noting that Company Y's management team is seasoned and reliable, with a proven track record of steering the company through turbulent times. This provides an extra layer of security for investors. Company Y is another undervalued stock with potential for significant returns. We've covered a lot today, so let's summarize. We embarked on an insightful journey into the world of undervalued stocks, where opportunities for growth and profit often hide in plain sight. The key, as we've discovered, is to know where to look and what to look for. We delved into the criteria for identifying undervalued stocks, a blueprint for smart investing. Remember, we're looking for companies with a low price-to-earnings ratio, a strong track record, and a robust future growth potential. We then turned our attention to two companies that exemplify these traits. Company X, a stalwart with a solid history of performance, yet currently undervalued due to temporary market fluctuations. Its low price-to-earnings ratio and consistent earnings growth make it a gem waiting to be discovered. Next on our list was Company Y. While it may not have the same track record as Company X, it shows immense promise for the future. With its innovative solutions and a rapidly expanding market, Company Y is poised for an upward trajectory in the coming years. Its current undervaluation presents a golden opportunity for investors willing to ride the wave of its potential success. But remember, investing isn't a game of instant gratification. It's a strategic play, a marathon, not a sprint. It demands patience, diligence, and a keen eye for detail. The world of undervalued stocks is a treasure trove for those willing to dig deep and wait for the right moment. So, keep these guidelines in mind as you navigate your investment journey. Watch these companies, Company X and Company Y, closely. Monitor their performance, study their market trends, and when the time is right, make your move. Investing is not just about making money, it's about making smart decisions. It's about understanding the value that lies beneath the surface, waiting to be discovered. And that is the essence of investing in undervalued stocks. Remember, the key to successful investing is patience and diligence. Keep an eye on these undervalued stocks, and happy investing.